Good morning, everybody. Welcome to this meeting. I would like to extend a warm welcome to all members of the committee and other members and officers in attendance at today's meeting. I am Councillor Alan O'Sullivan, Chairman of the committee. Welcome to members of the public and press who may be listening to the meeting live on YouTube. The audio broadcast will remain available for a minimum of 12 months. I would like to remind those in attendance to use your microphone when speaking, and remember to switch off once you have finished speaking. Please switch any mobile devices to a silent setting for the duration of the meeting. For the benefit of those listening to the meeting online, I will now call the names of each committee member and ask them to introduce themselves. As I previously mentioned, I am Councillor Alan O'Sullivan, Chairman of the committee. Councillor Alvey?
Present, Chairman.
Councillor Levitt?
Present, Chairman.
Councillor Savio?
Present, Chairman.
Thank you. And we have apologies.
Yeah. Apologies from Councillors Lane, John Ward, Jack Davies and Hilary Brand.
Thank you. All right. Item 1 is do members agree the sets of minutes as listed on the agenda as a correct record?
Agreed.
Good. Do any members have any declarations of interest in respect of the business of the meeting today? No, I'll take it as no. There are no public participants today. We would then move on to item 4, which will be the exclusion of the press and the public. I removed the following resolution that under section 100A4 of the Local Government Act 1972, the public and the press be excluded from the meeting for the following items of business on the grounds that if they involve the likely disclosure of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Act, and the public interest in maintaining the exception outweighs the public interest in disclosing it. Right, so we are now going to move into private session, and the broadcast for those listening in will be paused. Well, welcome back to the public meeting, and welcome the officers who have arrived this morning. We'll move on to item 6, which is the Treasury Management Outturn 2021. Who's doing that, Gemma? Welcome.
Good morning, everybody. Excuse me. Right. Sorry. So, good morning. This report fulfills the Council's legal obligation to have regard to the SIPFA Code and provides an update on the performance of the Treasury Management function during 2020-2021. All Treasury activity has complied with the Council's Treasury Management Strategy and Investment Strategy and all relevant statute, guidance and accounting standards. As we all know, the pandemic has dominated 2020-21 with huge effects on the economy and the population, both in UK and across the globe, which has in turn affected local authorities and the management of their financial position. Table 1 on page 15 of the report shows the capital financing summary at the 31st of March 21 in comparison to the position a year earlier. The general fund capital financing requirement has increased as resources have been required to finance direct property investment. The housing revenue account capital financing requirement has increased due to progress on the housing delivery strategy. Overall, the borrowing position has increased by £1.8 million due to an increase in internal borrowing of £6.1 million as a result of the increased HRA CFR, largely offset by a reduction in external borrowing of £4.3 million as a result of the repayment of the maturing HRA debt. This is in line with the Council's policy on internal borrowing, and no new borrowing was taken out during the financial year. Table 2 on page 16 of the report shows the Treasury management position at the 31st of March 21 and the change during the year. This table shows that the net borrowing position has increased slightly from £74.4 million to £77 million, as although external borrowing has reduced by £4.3 million, this has been offset by the total investments balance reducing by £6.9 million. Table 4 on page 18 of the report shows the Treasury investment position at the 31st of March 21. Investment balances have reduced as cash has been utilised in financing the capital programme. In delivering investment returns, the Council has operated against a backdrop in which the UK bank rate was capped to 0.1% in March 2020 in response to the pandemic. It has remained at this rate throughout the year, having an impact on rates across the market. Returns have been at or around 0% for liquid investment options and haven't been significantly higher for other short-term options. Investment income has therefore largely come from investments arranged at fixed rates of interest prior to the pandemic and through the Council's investments in pooled funds. Table 5 on page 19 of the report benchmarks the Council's investment portfolio, excluding pooled funds, at the 31st of March 21 in comparison to the previous year and in comparison to other Arling Close clients. It shows that the portfolio has compared favourably with the other local authorities included in the benchmarking exercise across all metrics. In order to minimise the risk of receiving unsuitably low investment income, the Council has continued to invest a proportion of steady core balances in externally managed pooled funds as part of its higher yielding strategy. The Council's investments in pooled funds fell considerably in value when the pandemic hit world markets, but have since recovered well. This recovery means these investments are now worth only marginally less in aggregate than the initial sums invested, as shown in Table 6 on page 20 of the report, demonstrating the importance of taking a longer-term approach and being able to ride out periods of market volatility, ensuring the Council is not a forced seller at the bottom of the market. The Council's investments in pooled funds target long-term price stability and regular revenue income and bring significant benefits to the revenue budget. The annualised income returns have averaged 4.28% per annum over the period the Council has held these investments. The cumulative total return from the Council's investments in pooled equity, property and multi-asset funds since purchase is shown in the graph on page 21. This highlights that the Council has benefited from strong and steady income returns over time and the way that capital values have recovered since March 2020. Pooled investments have no defined maturity date but are available for withdrawal after a notice period, and their performance and continued suitability in meeting the Council's investment objectives is managed regularly and discussed with Arling Close. Section 9 provides an update on the Council's non-Treasury investments, and further information is available in the investment property note within the annual financial report. And as mentioned earlier, the Council's Treasury activities have complied with the CITFA Code and the Treasury Management Strategy, and sections 10, 11 and 11 of the report run through the various limits and indicators that apply to the Council's Treasury activities. Section 12 provides information on the 2 consultations launched by CITFA on changes to its Prudential Code and Treasury Management Code of Practice. An update was issued by CITFA last week with a response. CITFA at that time also stated that a further consultation on these 2 codes will be issued later this month, with the intention of new codes being in use from December this year. That was all I was planning to say today. Does anyone have any questions for me?
Thank you for your thorough report. A couple of things is, a simple one to start with is, a couple of years ago I thought we borrowed some money from the Public Works for Lymington Marina, but I don't see you mention that in here.
Yeah, it's included within the repaid figure. So the 4.3 million that we repaid in our borrowing last financial year, 4.1 million relates to the HRA debt, and 200,000 is the principal repayment for that particular item. So yeah, so it's embedded in the figures as it's small in proportion.
Okay.
Yeah.
And the other thing is the HRA, which is about 3% odd that rate at the moment. Have we looked at refinancing that as the interest rates are obviously very low?
In all honesty, no, because we still think because the period of time that they've got left to run, I think with the early redemption charges would be so extortionately high that would offset or more than offset the potential then reduced rate that we'd get as a result of the market now. I mean, I'm more than happy to get that confirmed with our Treasury advisors, but I'm pretty confident that'll be the answer.
All right. I think you've got enough work. Questions? Councillor.
Thank you, Mr. Chairman. It's just a quick question on Table 8, our non-treasury investments. It seems we did quite well with the ones that are which have like the business parks and the Saxon. Has there not been an effect from COVID over that? Have we our return on that? Have we been asked to the rental and things on that? Has anything occurred over that? Because COVID has affected so many businesses, and has it affected any of our properties where there are businesses? Thank you.
Yeah, again, I can take that one. So the short answer is no. We haven't agreed to any rent waivers at all, but we were happy to take any conversations, have discussions with any of our tenants in terms of rent deferrals. So we have put some rent deferrals in place. But we are now almost in a position where rent is now fully repaid. So yeah, it hasn't had any significant impact at all.
Councillor Lever.
Thank you, Chairman. Pedantic question, I'm afraid, if you don't mind, Alan. Just on Table 4, local authorities, we're up to 17 million now. Are these all local authorities in Hampshire, for example, or can it literally be the whole UK sort of thing? And if you just want to send me an email about, or send the committee an email.
Oh, I can answer that. It's fine. Actually, we don't lend to any other councils in Hampshire. It's every council outside of Hampshire, and that's to ensure that if there's any reason that the council that we've lent money to defaults, what can technically happen is we can claim that money back on their council tax bill, and we don't want other Hampshire residents being penalised in like that. So no. Okay.
Thank you.
Okay. No, looks like you've gone off lightly. Oh, sorry. Yeah.
Just one thing really, and it's for Alan, and just to clarify these higher yielding investments, as I recall, are treated as a cost in the accounts. Is that right? They're not an asset.
Yeah, the fluctuations in capital value technically will be treated as an expense through the income and expenditure statement. But we're in the third year of a statutory override, so actually we've just entered year 4. So yes, we have to account for any loss on their potential capital value, but we then reverse that transaction effectively. As you say, we can do that for another 2 financial years, at which point we're still hoping that SIPFA realise that that's a sensible position for local government to stay, and that statutory override will continue. So the fact that we've got 2 more financial years left to run, I'm sure that there'll be consultation out on that soon. It'll start well ahead of that 5-year override position finishing.
Okay, thank you.
Okay. Very happy with that. Thank you very much, Joe. Right, move on to item 7, which is the final account bad debts write-off. That's over to you, Ryan.
Thank you, Chairman. Yeah, this report just informs members of the total bad debts written off during the financial year 2021. Debts have been written off in services including council tax, business rates, housing benefit overpayments, housing and parking. And the criteria is a set criteria which we agreed previously, primarily abscond, liquidation, bankruptcies, debt relief orders, etc., deceased estates, small balances, it's where the amount is uneconomic to pursue further, where debts have been returned from the enforcement or collection agency. The total debts written off in 2021 was just under 600,000, less than the previous year. That represents 0.25% of the total income, again less than the previous year. Primarily that's less due to the pandemic, the impact that's had on collection. and also the suspension of recovery. So the courts weren't open during 2021, so we're unable to pursue council tax or business rate debts. That's now resumed, so we reflect the write-offs to be higher in this year as we start resuming and recovering those debts. Appendix 1 gives the details, and again it gives a comparison in Appendix 2 to the previous year. It also includes details of the average value of the account amount written off, and also as a percentage of the annual turnover. You'll notice there's no write-offs for accounts receivable last year, primarily twofold. One, due to a new IT system that we introduced, and secondly, and more importantly, due to the impact of the pandemic on the team. We have resumed write-offs, and a schedule has already been submitted about to be processed. So again, although it was 0 last year, we're catching up this year, so we'd expect the amount to be higher than previous years. We've looked at the bad debt provision as well. So each year we make a bad debt provision. That has increased from the previous year. And what we've had to do is adjust our bad debt provision for council tax and business rates. Historically, we've used a set formula based on the recovery stage of the debt. As I said, because there was no recovery last year, because the courts were closed, we had a lot of debt sat at bill stage, which in normal circumstances would either have been moved to a reminder or a liability order stage. Appendix 3 gives the detail to what we've done. We've looked at the previous 3 years average of the breakup of the debt and applied that to the debt that we had this year to give a truer reflection. Obviously, we know there's a large amount of the debt sat at bill stage, like I said, which normally would have progressed through the recovery proceedings, and that would have been reflected in that. Happy to take any questions.
Okay, thank you, Ryan. Considering how the last year's been, I think we've handled that rather well in general. Congratulations on that. Keeping that under wraps. Yes, ma'am.
Sorry, Chairman, probably just a pub question, Mark, if I may. Just on paragraph 2.2, you talk criteria for write-off include foreign vehicles. Now, presumably this is car parking income, and they haven't done what they should have done and what have you. That's a commonplace thing across the country, I guess.
Yes, yeah.
It is.
So,
Yeah, thank you, Chairman. Just to clarify, perhaps it's just the wording. In table 2.5, where you talk about write-ons, and the write-on this year was 5,000, not big money. What's the story behind this? I mean, are these people paying back debts? Is that what it means?
No, so these are credit balances on accounts, so they pay too much than what their council tax account is for. We've tried all avenues to recover trace the person to find where they are, so we can repay the credit, refund them that money. In some cases, we can't. It might be things like we have a council tax banding reduction, which goes back many years. It affects all the accounts going back to 93. So you might have old accounts which are in credit. They moved out 20 years ago and you've got no idea where they are. So where we're unable to trace, then we were at. But we do explore every avenue to try and make sure where people are entitled to a refund, they get that money.
Okay. So how long do we keep this sort of, it's like an accrual then, is it, in case they come and ask for their money back later?
If they were to ask their money back and we've written it on, then we can reverse that and refund them. But we do monitor that regularly, albeit last year it wasn't a top priority, but we have caught up. But those amounts are up to date now.
Okay, thank you.
thank you. No other questions? No. Thank you very much, Ryan. Moving on to item 8, procurement rules and waivers for 2020-2021.
Thank you, Chairman. This is the standard report you receive every year at this time, setting out the requirements to comply with our standing orders as to contracts and those that have been waived under the waiver procedure that the Council has adopted. Chairman, you will see in section 3, pleased to say that this year there were only 5 applications for waivers. in the last financial year compared to 39 in the previous year, Chairman. And you'll see the value of those waivers. Chairman, happy to take any questions.
Councillor.
Again, perhaps we don't have to know or need to know, but why were these waivers issued? I mean, what was the problem in following the procedure?
I mean, perhaps, Chairman, I'm happy to give. I think the two biggest ones were within the housing services, and the first one related to the ability for the council to turn around void properties for reletting. Now, Chairman, you'll recall at the start of the pandemic, everything shut down. Suppliers, we couldn't get materials, supplies.
Still can't.
So, Chairman, a backlog built up, and we were desperate to relet these properties for the vast numbers on our housing waiting list. So, Chairman, we had to quickly act, and we were unable to go through the tender process to appoint a contractor to help us turn around those void. These are existing council houses that have came vacant, and you can imagine when anyone moves out of a council house, there needs to be quite a lot of work done to those properties before we're able to relet them. So this backlog was just basically building, and we needed to act, and we didn't have the time to go through the full-blown procurement procedures. Likewise, with another contract within housing relating to the capital works programme for bathrooms, we did have a contractor appointed, but coming out of the pandemic, when those first restrictions were lifted, I think they had just so much work on, they couldn't commit to this council at a pace that we needed them to do to deal with the bathroom replacement programme. So once again, we had to act quickly. We didn't want our tenants waiting, who were promised new bathrooms, waiting. We had to act quickly. So, Chairman, I'm satisfied. Those were the main ones, that the waiver procedure is there for those really exceptional circumstances, and I do believe that they were right to be granted the waivers. Thank you, Chairman.
Thank you for that. Can you just confirm, I mean, again, it's not big money, but can you confirm then that these waivers, the expenditure was within the planned budget? We didn't go over the budget because of these waivers?
Well, perhaps Alan can help me out in terms of the HRA is a large budget, and pretty much at the end of the year, so hopefully things will even itself out. Alan, do you want to comment on that?
I was going to say, overall, we did spend more on void turnaround in the last financial year, because as Grania said, the amount of properties that came through created a bit of a backlog, and we wanted to make sure that we weren't holding onto these properties for any longer than we needed to. So we did spend more on voids, but within the HRA as a whole, I think as we'll see when we come to the draft financial report, there were offsetting underspends elsewhere within the housing revenue account, so it was all covered.
Councillor.
Thank you, Chair. Yeah, I mean, paragraph 3.1, you talk about how we had 39 applications for waivers in 17-18, and it's now down to 5 applications. It's a great improvement, reflects well on management of the council. But just a pedantic question, 3.3, you talk about 2 of the approved waivers were over £100,000. Presumably that's 2 of the 5 applications. Can I ask, if I can ask, what sort of area of the council's business were those waivers applying? Oh, sorry, I've been... Housing. Okay, thank you very much. Sorry, I was diverted.
Okay. Lovely. Thank you. Thank you, Grania. We'll move on to the item 9, which is the fraud annual report 2020-21. That's you, Ryan.
Thank you, Chairman. Yeah, this is a report for members on our annual fraud for 2021. COVID has an impact on that, as it has with most things. We were unable to do face-to-face interviews. They were suspended throughout most of the year. So we focus on other activities. Indeed, the fraud officer helped out in the revenues and benefits team with a peak in workload last April, May and June, and also with the administration of the business support grants that we paid out this year, over £70 million paid out. 2.1 provides details to the referrals. We've had 62 referrals during the year. They come from a variety of sources, whether internally or externally, and again covering different aspects: living together, capital, so that's things to do with housing benefit, council tax reduction, also housing tenancy as well. We did issue one civil penalty for a council tax reduction claim through undeclared earnings, and also following an allegation of non-residency, we managed to get a tenant to surrender their tenancy, so we're able to re-let that property to someone from the Home Search Register. Policy updates. We have money laundering, whistleblowing and the fraud strategy. They were last reviewed in 2018 and they're due to be reviewed every 3 years. So they have been reviewed and they'll be coming to the next committee meeting later in the year. Similarly with joint work in the Department for Work and Pensions, that was suspended for the whole year. Most of the DWP resources were redirected onto universal credit new claims. So we're hoping to resume that as soon as possible. We are in liaison with the DWP to start those investigations. We've had another data match with the National Fraud Initiative. So we've got a legal obligation to supply data to them. They use our data to match against other data sources. They've come back with 876 potential referrals, and we need to look at. What we do as a process is to prioritise those that are high risk. So they're giving us scoring, each those 876. We will prioritise those with high scoring just because there's just so many of them. What we do find is a lot of the referrals we were already aware of, or we've got things in hand, or we've already been done. There is a bit of a time lag between getting that data match, sending it off, and then getting the data matching back. As I said, we've already checked 118 so far. I mentioned business support grants, paid out huge sums of money over the last year with various schemes. We've used the government tools as recommended, Spotlight and the NFI data matching software to check eligibility to numerous applications. We've also done a lot of work with the economic development team on eligibility. And what we did have was an e-form with inbuilt security checks to minimise the risk of fraud and error within that. So that looked at things like matching it to our back office Northgate system, matching it with the account number, whether they got the retail discounts, bank details, bank name, and the account name. So we built in a lot of inbuilt security checks to minimise fraud. There was one fraud identified. It was an applicant who made 3 applications as part of a national organised fraud scam, a total of £60,000. As soon as we were notified, we referred that to the National Anti-Fraud Network, who are pursuing that and investigating that as part of a national investigation. We also had a couple of applications for our additional restrictions grant, which we actually refused before we were notified of their fraud. They were fraudulent, so due to our robust in-house checks, we'd already refused those by the time we were notified. We also looked at things like self-employed income support schemes and housing benefit and our council tax reduction support scheme, again using HMRC data to match those recipients of those support. Training, we've given staff, procurement card holders, training during 2021, 80 of those, and also we link in with other local authorities across Hampshire just to keep updated of any changes, discuss new initiatives, ideas, any joint working and good practices, and we're maintaining that throughout the year. All service managers will asked to complete a fraud risk register, so that's looking at their service, looking at all the potential risks, what could be done to mitigate those, any actions that need to be taken. And again, I've just recently sent an email out to all service managers to review those. So that's something that we will keep constantly reviewing to make sure that they are up to date. Future activities. Again, we went live with our new website last summer. We're reviewing the actual fraud content on the website. So what we're looking to create is a central page for fraud, and then we can link that in with council tax, housing, business rates, benefits, etc. And also we want to provide some information on there about scams. We've had a few cases reported about potential scams, asking people for their bank details because of a potential council tax refund. So we want to put a bit of information in there about scams, and we will continue to utilise and promote those awareness of scams on social media as and when we're aware of them. Happy to take any questions, Chairman.
Thank you. Well, the first one for me is the 973 council tax reduction, and then the person got fined £70. How much does it cost us to have processed that with officers' time and etc.?
We have a dedicated fraud and compliance officer, so part of their role is to undertake those investigations, process and administer those £70, so it's no additional cost.
Yeah. And the other one is the 60,000 fraud that we gave the money out basically, but there's anti-fraud are going to do the investigation. Is there any comeback on us because we gave the money?
No, the government have said where we've administered and paid grants in good faith and an understanding, there's no recompense from us. So that will be investigated, like I said, as part of a national investigation. It was many applicants across the country, many councils were affected by that. But no, it's no cost to us.
No cost, no comeback. No. Councillor Levitt.
Thank you, Chair. Just a couple of quick questions. Just paragraph 1 and 2 in your report. Corporate fraud and compliance officers is 0.53 of a full-time equivalent. So what does this actually mean? Is it a part-time officer 2 or 3 days a week, or is it an officer who's spending 2 or 3 days a week on this matter? I'm just comparing to the challenge we had with information governance going back, decades and what have you.
No, it's a part-time post who's solely focused on corporate fraud and compliance.
We shouldn't be thinking that fraud is such an important matter to us that it needs to be a full-time officer. That's the point I'm labouring, I guess.
Workloads are monitored, and if it comes to a point where the work is not able to be achieved in that time, then we will always review resources. At the moment, it's manageable. Obviously, the last year has been an impact, so you can't compare like with like. But going forward, if there was a time where it wasn't sufficient, we will always review that.
And then my pub question, 2.3, the non-residency of a council property where rent's being accrued by whatever, has this been commonplace in the last 10 years? Do I tell the resident when they ask me about it?
If it's been commonplace, I haven't got the stats to hand. Obviously, where we are notified of a non-residency, that is part of your tenancy conditions to make sure you reside in the property. Where we have those allegations, they're always thoroughly investigated because we know there's lots of people who want to be in that property and would reside in it. We do get some allegations which are unfounded, but I said they always go through full investigation.
Thank you.
All right, Councillor Harville.
Yeah, can I just pick up on that? When you say it was non-residency, had he or she sublet the property? So was there someone living in it but not the registered tenant?
Yeah, no, it wasn't not sublet. It was just they weren't residing in the property. They were living elsewhere. Furnished but unoccupied. Yes, they weren't living there. So that they were. The tenancies in the tenant's name. That tenant was not living at that property. They were living elsewhere.
Yeah, but somebody was living there, probably giving the money to the tenant, registered tenant.
I think my understanding it wasn't sublet. So there's no one else occupying the property. The actual tenant was living elsewhere.
I just wondered if you were making someone else homeless, that's all.
No.
Okay. All right, thank you for that. Just also on the Appendix 1, if you look at that, on the where it says internal investigation, where it says member given guidance on protocols, it should be member of staff, not members.
Apologies.
That's in your Appendix 1, which is the last page in there. Top of Appendix 1. Yeah, so it's member of staff. Okay, moving on. Moving on to item 10, annual internal audit report. Anthony, you're on.
Thank you, Chairman. Good morning, members. So I'd like to present to you this morning my annual reports and opinion in respect of financial year 2021. I'll refer to the agenda pages throughout. So if I can ask you to turn to agenda page 50, and in particular the final 3 paragraphs at the bottom of the page. In line with the government directive, if you can work at home, you must do so. It necessitated us to complete all of our work virtually over the year. However, I'm confident that that hasn't compromised on the quality of our work, the ability to undertake the work, or the ability for me to form an annual report and opinion. The opinion is provided for you at the bottom of agenda page 51, and it's in 3 parts. So firstly, that I'm satisfied that sufficient assurance work has been carried out in order for me to form a reasonable conclusion on the adequacy and effectiveness of the Council's internal control environment. And in my opinion, the framework of governance, risk management and control is reasonable, and our work we generally found controls to be operating in practice, but where any weaknesses or issues were identified them, as always we worked with the management team to agree appropriate actions and timescales for improvement. Moving on to agenda page 52, the chart gives a graphical representation on where our audit work was focused over the year, in line with the plan that was agreed by the committee back in, well, I think it was circulated back in March. The committee didn't actually take place, did it, if memory serves me right? And obviously we've regularly reported it back to you for our normal progress reports. So we undertook 32 pieces of work during the year, and the results of that is provided for you on agenda page 53. So I'm pleased to report that there were 5 substantial assurance opinions concluded during the year. 18 reviews concluded with reasonable assurance, and there was only 1 limited assurance review. I'm pleased to note there were no assurance reviews issued during the year. There's some pieces of work that didn't culminate in a formal assurance opinion, for example, grant certification work, where it's a sort of yes/no answer. There was just 1 review that, due to the impact of the pandemic, we couldn't actually complete it in time in order for it to form part of the annual reports. That work won't be lost, it won't be aborted, it just carry forward and form part of our opinion for next year. The opinions for each of those reviews for the 5 substantial, 8 reasonable and 1 limited are actually provided on page 59 in appendix 1 if you wanted to cross-reference it back to each individual review. Now moving on to page 54, which is my key observations for the year. I think it's primarily sort of twofold. Firstly, that the Council's main financial system was implemented in April 2020 as a replacement to the legacy system. We looked at pretty much all areas of the financial system towards the end of the financial year. And we're pleased to report that despite the inevitable impact of the pandemic, the change of systems, officers adapting to new ways of working, all of the issues that we faced during the year, we haven't identified sort of any significant issues over that change of financial system or with the key financial system areas, although a few areas for improvement, as you would expect, have been identified. And again, work with the management team with those. Moving on to the payroll increments, which was the only limited assurance opinion report that we undertook during the year. This was actually an area that we was specifically asked to look at before going into the increments process that would have taken effect from April 21, but it was a backward look at the process that was undertaken the previous year to sort of identify any issues and lessons learned. Now, I have gone into quite a bit of detail there because I haven't previously reported it to the committee due to the timing of when the review was undertaken and when the committees took place. However, I'm pleased to note that I think 11 out of the 13 areas that were identified as sort of potential issues, or 13 of the actions rather, not 13 of the issues. 11 of those were addressed immediately going into the increment process that's sort of recently taken place, and the 2 remaining actions are more sort of longer term actions to get things documented and really laid down. And again, I think some of those issues really arose from the sort of change in the payroll systems in previous years and things just not quite getting documented and a bit of inconsistency in things being followed. What I would like to say, I think with the change of financial systems, the pandemic, as I say, all the new operating ways of working, to actually have one limited assurance review during the year, I think sort of quite remarkable and needs to be looked at in that context and not sort of taken disproportionately. So moving on to the remainder of the report, I think we previously reported back to the committee the results of our external assessments, but obviously we passed with flying colours and there was no elements that we didn't comply, and therefore I have no disclosures of non-conformance to report to the committee. So the final bits, just moving on to page 58, gives the performance dashboard for the year. And I'm pleased to report that we were above target or met all of our performance targets. So we delivered 97% of the revised audit plan through the draft report stage. Based upon the survey to officers, members and other stakeholders in the management team, that was also backed up by the external assessors when they did their work. We had a positive satisfaction rate to our work of 98%, and as I said, we were fully compliant with all of the standards. So I think my final sort of comment really is just really to formally pass on all of my thanks to all of the officers who really supported us during a difficult year, and certainly without their cooperation there'd be absolutely no way we could have gotten to 97% delivery. It would have been really easy, given the pandemic and all of the pressures that everyone was facing for internal audit, not to be the top of their priority list, but they facilitated all the work, and I think that's really reflected in the positive outcome. So I'll pause there.
Thank you, Andy. I think, looking at that, I think we could take the year off. And I was surprised that there's no formal documentation for pay progression within our system, which is what part of the payroll thing that you're looking at. I mean, that's not necessarily a question for you, but
there's obviously the criteria for applying it and all of the governance rules around that. It's just more how to do it in the new system and getting that sort of consistency to make sure things didn't slip through the net, whereas there was the issue rather than it being a policy issue.
So our aim this year is to get more substantials rather than reasonables. Questions? Councillor Alva.
Yeah, sorry. Anyway, very good report, but there's a little bit of small print, which always worries me. On page 53, you say 7 reviews did not culminate in an audit opinion.
Yes.
Can you just clarify what that means in effect?
Absolutely. 2 were grant certifications, so it's a yes/no answer. It's not us forming an opinion on the arrangements, it's us certifying that the money was spent in accordance with the government guidelines in line with the government returns. So it just culminates in a standard report which is determined by whoever gave the council the money as to what format that takes. But essentially it is usually a case of looking at the grants and making sure that the grant was spent in accordance with the grant conditions and all the money was used and was accounted for appropriately. So it's not us saying it's substantial, it's reasonable, it's us just certifying in line with the government requirements. Some of the money you get given, there's strings attached, and part of it is us checking it, but not with all grants. We gave some advisory roles in 3 areas, so a couple of areas in and around the IT area and around PCI compliance. Also on the IT business continuity as well. We helped Ryan and the team, as on the previous paper, provide the P-card fraud training. So it's obviously effort on our part. It forms part of the plan, part of the service that you pay us for, but obviously it's not for me to say whether or not the training was substantial or reasonable. I'm sure it was very well received. And also we formally follow up on all of the actions that have arisen out of previous reports that's reported in our normal progress reports to the committee. One of those pieces of work where it was a limited assurance review in a more significant area, we formally followed that up and got confirmation of the progress in implementing those actions arising from the fleet review that I think was reported back to yourselves and the committee as part of the 1920 report. So those are the 7 areas that it's activity on our part, but it's not assurance work as such.
Do you understand this, Mr. Chair? I'm sorry. I mean, I don't quite know. I mean, if it was a review, surely after the review, whatever it was, you have an opinion that yes, it's closed out, it's okay. You know, further work needed, whatever. And I just don't understand why you say you don't have an opinion on these 7 reviews.
Sorry, it should, I'll look at the wording for next year. It should be then 7 areas of activity did not culminate in an audit opinion.
Okay, all right, okay. I'll accept that.
Specific areas are selected on them, on those.
Yeah, it's, you know, the government grant works, we have to formally review them if that's the terms and conditions of the government grant, but then we make the return to the government based upon their requirements. So it's not assurance work as such.
Okay, thank you.
Okay, nobody else? No. Thank you very much, Andy.
Thank you.
Look forward to the next one. Right, we'll move on to item 11 then, which is the Code of Good Governance review.
Thank you, Chairman. Members, this report deals with the annual review carried out by myself and the 151 officer into how the Council measures against the SITFA and SOLAS Code of Good Governance. Members, you will see in section 2 of the report that the good governance framework centres on 7 core principles. And Chairman, I'm sure members will be well familiar with the format of this report. Appendix 1, that long set out document sets out how, in our opinion, the Council complies with the various principles and essentially the evidence-based, Chairman. Right. And that's Appendix 1 for you. Appendix 2 deals with progress against last year's action plan arising out of the previous Code of Governance review. And Appendix 3 are the new actions arising out of the review that we will take forward this ensuing year, Chairman. Al and I will be very happy to take questions.
The payment card keeps cropping up.
I'm going to hand that over to Alan.
It should have its own standing agenda item, I think.
Yeah, you are right, Chairman. It's appeared on the action plan for many years now. We have made some level of progress in the last financial year, I can assure you. However, it was quite difficult last year. For the last 5 years. Yeah, what we have now got, we've identified the single payment source that's causing our problem with compliance. So we've identified that. We've got a project team that's set up who's actively now looking at basically a solution to the problem. And so we are confident this time last year we will be able to remove that item, unless, of course, the regulations change again, which is always, because they are always a moving target, unfortunately. But yes, I can assure members we are working on it. It is something that's still in a focus. It's just last financial year was a bit tricky to allocate too much time to this, considering everything else that was going on.
Okay.
Sorry,
that's okay.
This is not a question, it's just a comment. Where it says review of compliance, the good governance framework centres on the following 7 core principles. D, determining how best to optimise the achievement of intended outcomes. I mean, that to me is ludicrous English. I'm sorry.
We agree with you. We agree with you wholeheartedly. These are wording taken straight out of the SIPFA SOLS code. Absolutely agree with you wholeheartedly. We try and interpret that in a sensible, practical solution. I entirely agree with you. I don't know who came up with that wording, but it is there. It's in the code. It is what it is, and you'll see what we say about that.
Yeah, I agree. It's just
No further questions? Lovely, thank you very much. We go on to now the draft AGS, which is Alan. So you should hopefully have the updated version of the AGS, because there was the wrong one sent out earlier in the week. Just make sure you got the correct version.
There's an updated version sent a couple of days ago, but I've got a paper copy here if you like.
I'll add 2 copies. I'm so sorry. You've got the wrong date.
Okay.
Yeah, thank you. Yeah. If I can apologise, members, unfortunately the 1920 draft AGS was circulated with the original copy of these papers, and as Andy says, a revised copy was circulated and put on Modern Gov as soon as we realised, and obviously a revised paper copy handed out. Essentially, not a lot has obviously changed in any case from last year. Obviously, what this does, it reflects on our governance arrangements, again, in line with those 7 core principles. It feeds information from the local code of good governance and obviously the internal audit opinion, and just provides a fairly general commentary in terms of our acceptability of our governance framework arrangements. It confirms our review of effectiveness through section 4. And throughout section 5, this is a new element. So there's a new financial management code that was introduced by SIPFA, and again, this now just introduces this and says that I will undertake a piece of work basically now this financial year in light of that new financial code. That will be brought back to the audit committee later in the current financial year. In terms of the significant governance issues, again, we've got on there the PCI item that we've just discussed. We've previously talked about our new information governance arrangements that we're going to put in place, and the fact that will be monitored through EMT and now this committee in 12 months' time, and the new item, which is the financial management code. So, Chairman, members of the committee are asked to approve the draft AGS, which will be submitted as part of the annual financial report to external audit.
Okay, it's fairly straightforward and a very good summary of how we have been for the last year and the way that we hope to go forward. Has there been any questions on this? No. In which case, thank you very much for that. It was an easy one, Alan.
Sorry, I just to say, I haven't read this because I got this morning, obviously. So I've had a number of questions on the previous one, but if I can just email you, if that's all right. Thank you.
Thank you. No, I think it's an excellent report.
It says approved. Do we have to take a vote on it, Mr. Chair?
No, that's, what did it say? That the Audit Committee approves the draft annual governance statement for the financial year ended 31st March 21 as reported in Appendix A. 1. Members agree to that? Yeah. Great. Thank you. Thank you, Alan. Moving on, draft financial, item 13.
Yep, thank you. So moving on to the draft annual financial report. And I've got Lisa with me as usual, as most of the work is done by her and the team. Yeah, it's suffice to say it's been an interesting year this year pulling this together. Obviously with the scale of the new financial pressures, if you like, and challenges that we faced as an authority. But I think to be fair, Lisa and the guys have done exceptionally well to produce what I think is a good representation of our financial position, in line with the standards, obviously, as laid out. So the draft statements are appended through Appendix 1 to 6. Again, happy to take any particular questions. In terms of Section 4 of the report, accounting policy changes and other key issues. So no changes to accounting policies, but I have taken the opportunity here to just point out a few of the key issues, if you like, that have affected our accounts for 2021. An example at 4.3 is to show a collection fund deficit of around 28 million. That is very much an extreme scenario. And that's all down to the amount of government reliefs that were introduced as part of the economic pressure measures put in place back in March. So a lot of businesses had their business rates basically exempted for the last financial year. So whereas we thought we were going to collect something like £68 million in rates, we've only actually ended up collecting 40 million. Obviously, we are fully reimbursed by the government by the difference. But because of the way the collection fund works, we have a year's gap effectively as to when we can recognise the funding to offset the less collection. So it's a bit of a quirk, really, more than anything else. In terms of 4.6, again, I'll just mention here. So we are producing group accounts this year. So as members know, we have Appletree Holdings, which is our wholly owned group of companies that deals with our residential property lettings. The accounts that I've produced here in the appendices are the NFDC standalone accounts. Lisa is working through the consolidation exercise as we speak. I'm sure that's what you'll be doing this afternoon, Lisa. So there will be an accompanying set that will be produced, and basically we will just introduce the balances and figures from Appletree Holdings accounts, and they will be produced as a consolidated set again for external audits review. In terms of the overall summary of our financial position, so our balance sheet reduced by just over 6 million last year, but we still hold net assets at 267 million. The value of our council dwellings increased. Again, we know what the property market's been doing over the last 12 months, so there's perhaps no surprises there. The value of our investment property has increased. Again, as we touched on in the previous report, we have acquired new investment property this year. So again, no surprises there. But obviously what that does, it contra reduces our cash balances. So it's almost a one up, one down type situation. In terms of our reserves, as I said, we've got a fairly significant increase in our usable reserves this year, so up by 14.4 million. However, the vast lion's share of that, again, it's our proportion of the £28 million collection fund deficit on business rates. So we need to use that £11 million basically next year to help pay for that gap. And again, the 11 million has come from the government. It's just the way we have to show it within our accounts. I've given some further information through Section 5 in terms of the revenue budget position. Again, I'll happily take any particular questions there. From my point of view, I think it's pleasing that actually we've delivered on our general fund services over the last financial year, and I think that was outlined quite nicely in our performance outturn report that's just gone through the rounds of scrutiny panels. One thing that, again, I'm particularly pleased with as well is our delivery of our capital programme. It's not always something we've been particularly strong at. You know, with the levels of rephasing we've seen in the past have always been fairly high. But actually we spent just under £27 million last year, which, considering we had an original programme of just over 25 million, we've actually delivered more. And that in part is because of some additional schemes that came forward. Again, this report touches on the pooled funds that we hold through our treasury management, and again confirms that I think we actually performed pretty well in terms of our interest earnings last year in a very difficult situation. The pension fund liability, this is one that always gets a little bit of interest here. I don't think there's any surprises here that the value of assets has obviously changed, and the value of our liabilities have changed. So it has increased our net liability up 17 million. Now, it always sounds like an exceptionally large figure on our balance sheet. And obviously the actuarial review that will take place in 2022, that will set the next primary contribution rate for the council for the next 3 years. So again, as part of our statutory arrangements to basically meet that liability. And on the basis of a slight reduction in the value of assets because of the last 12 months, again, I wouldn't be surprised if we necessarily see ourselves with a secondary pension contribution rate again being reintroduced to the council. So we've kept something in our budget to accommodate that in any case. So members, you're asked here to note the draft accounting statements in Appendix 1 to 6. We will be submitting these to the external auditor by our revised deadline of the 31st of July. Thank you.
Okay. Question?
Sorry. Just one on pensions. I mean, I'm very pleased that, you know, with the situation you've shown here, and you've explained that this deficit is made good over the future, well, you know, employment, working lives of employees. My question just relates perhaps to, and I don't want to get personalise this, but to question of early retirements. And do we ever face the situation of making additional payments to the Hampshire County Council Pension Fund to cater for early retirements of our staff?
Yes, we do in certain instances, but that's always then picked up in the relevant business case that goes forward. So it's picked up in the business case that we always produce in terms of understanding the saving that's going to be generated as a result of that member of staff leaving the authority, as opposed to the one-off costs that the council will incur in facilitating that. And we always target a payback, maximum is 3 years within our payback.
That probably does answer me. Okay. Thank you.
Well, Appletree Property, which is now, you're saying that's going to become a group account within us. So if that Appletree Property Group is making a profit or is making a loss, it's going to come into NFDC accounts. So who's taking responsibility for that, and what oversight is there for that?
Okay, so the council's investment panel, so that's the panel that was set up and established off the back of the commercial property strategy and the residential property strategy. So they receive regular updates from Andrew Smith and Lisa as directors of that company. And ultimately, in terms of the shareholder representation, that's historically been myself, the portfolio holder for finance, and the chief executive. And again, that's the arrangement that would follow. So in terms of New Forest District Council's representation, in terms of having the annual shareholders report, it's us 3 individuals, but more regular reporting through the investment panel.
Okay. Right. Councillor Levitt.
Thank you, Chair. Sorry, this is an anal question. I apologise very much profusely. But to page 90, the Appendix 5A, we don't break down or separate out the town and parish council precepts. Can I please request that we do that? Because I think it's very important that residents understand how much it's costing to have these parish councils.
Yeah, I'm happy to confirm. I mean, obviously, when the actual council tax precept is set, that report itself, it includes something like 230 odd different iterations of council tax bands payable by each individual parish. So it's at that point that the council tax is set that it's shown. What our accounts show here, it does show the split between what we collect on behalf of the town and parishes and what we collect for ourselves. And obviously what we collect is our role of collection authority for the county council as well. So it's covered in various points.
Elsewhere, but in a major report, it would be useful to have it broken down personally. I'm sure Lisa wouldn't have to be happy with it.
As I say, it is covered at the point the council tax is set. that's the relevant time when we set the value of the precept, that we show those individual charges per parish.
Can you put your microphone on, please? Can you put your microphone on, please? You finished? Or? Finished. Okay. Right. Good. Any others? No, I think we've accepted that. Thank you. I think we need to say, what do we need to say? Come back. Members note the draft annual statement set out in Appendix 1 to 6, which are a summary of the annual financial report that will be certified by the responsible finance officer, 5S151 officer, for the submission to the external auditor by the deadline of the 31st of July. That'll be interesting. Okay, when all agree to that? Good. Let's move on to item 14, which is the external audit plan. Before that, as well as the item on your agenda, you should have had an extra one which had 2 letters from EY, which is an additional agenda item 14, which is one in January and one in January and one in June. I'll just hand those out.
I was busy today yesterday, Mr. Chairman, so I picked up on anything.
Okay. Okay, Kim.
Thank you, Mr. Chairman. Good morning, members. So this is our audit plan for the year ended 31st of March 2021. So it's the plan to audit those financial statements that Alan has just been talking to you about in the previous item. So we would normally presented this plan to you in earlier meetings, probably around about March time, but the impact of COVID-19, changing timescales in the previous years and various backlogs have caused delays to our normal cycles. That's going to be a subject to which I'll return, and that is the subject of those supplementary papers that you've either received previously or have just been shared with you. The plan contains a number of aspects that are similar to the prior years, but it also contains a number of aspects that are new. And it's those aspects that are new I'm going to be focusing my presentation on. So if I could ask you to turn to page 5 of our report, which should be page 97 of the pack. So we have our normal dashboard here of the risks that we've highlighted for the financial statements. And we've annotated those, whether they are going to be changes in risk or focus in the previous years or new this year. So on page 97 itself, the first new item would be the change in the authority's financial ledger. And then as we go over the page onto page 98, we're highlighting here 3 new areas, and these are all essentially related to the impact of COVID-19 and the various grants or arrangements the authority will have to account for. So those are the, just in very brief summary, the highlights. Alan has already outlined that you will be undertaking group accounting this year and consolidating your subsidiary, and we've raised this on page 99. It's very difficult to do the planning for a set of group accounts until we actually see them. So we've been, I'll paraphrase it as vague in terms of the plan. What we will have to do is understand the values associated with the subsidiary, identify those that are significant to the council in terms of its consolidated group accounts, and work out a strategy to audit those. And then we will focus upon the consolidation arrangements to make sure they're brought in and consolidated appropriately, taking out the transactions that go between the council and the subsidiary during the year. We think our approach is going to focus on a direct method of undertaking that work, so we won't be relying on another auditor of the subsidiary. We will likely just audit the key values ourselves, and then the consolidation entries we would always do ourselves. So that's our general proposed approach. But once we have those financial statements and understand just a little bit more about what we're looking at, we can come back and let the members know if those assumptions would be significantly different. Then on page 100, we talk about the audit scope, and at the bottom, we start mentioning about the timing of the audit. And this is where the information, the supplementary letters about delays and backlogs from COVID-19 really kicks in. So it's not only not impacted upon the timing of presenting this plan, but it's going to knock on to the delivery of our audit this year. So essentially, we cannot deliver all of our audits to an appropriate high quality standard by the 30th of September across all of our clients, especially if a number of those clients are not going to be producing their accounts until the 31st of July. To do so in 2 months is just impossible. So what we have decided is that we are going to have to prioritise and rearrange our visits over the period. Because what we don't want to do is start everybody's audit, we don't finish anyone's, and then we're left hanging with a position where we don't actually know how and when we're going to be able to finish it. It doesn't work for us in terms of our resourcing, and it certainly we don't think works for the officers of any council in that position because they can't plan their workload around it. So having identified the problem, we've had to come up with a solution, and as part of that solution, we have needed to move the audit of this year's financial statements for New Forest Council to November 2021. So that's the position where we can assemble a full and appropriately qualified audit team to come in and do them in an efficient and effective visit, start it, finish it, and then move on away from you and let you get on with all your normal other aspects and workloads. What I would like to reassure the members on is this is not a negative comment upon the quality of the council's accounts or its ability to support an audit. It's nothing to do with that whatsoever. This is about our ability to put out an audit for you to support. So it's about logistics and timing and making sure we can do it appropriately and efficiently. So if I move back then to the audit risks, we set these out in section 2 of our report, which starts on page 102. So very briefly skipping over the first couple of risks, page 102 and 103. These are very similar to the previous years. We recognise there are various risks of fraud that we have to ensure that we look at. We're not saying that this fraud is actually occurring, we're saying there is a potential and opportunity, so therefore we need to undertake a programme of work to actually make sure it isn't occurring. And it's a similar programme of work to those in previous years. So on page 102, it just recognises the general management override, which is essentially that officers put in the control framework so they know how to step around it. So we try and make sure that's not occurring. And then on page 103, we undertake a programme of work to make sure that expenditure is appropriately categorised between revenue and capital. On page 104, which is again a similar risk to those in previous years, this is about the valuation of land and buildings in your accounts, falling under the headings of property, plant and equipment and investment properties. These are areas of a lot of judgment, and we need to make sure those judgments have been exercised appropriately by qualified specialists. The assumptions are reasonable and can be backed up by appropriate evidence. And the actual factual information used in those, such as floor areas or income values, is appropriately supported and used. So we then move on to page 105, which is the first of our new risks, and this one was about the new financial ledger. This is always a major focus for an auditor when an authority or a company changes its ledger, and we need to make sure that we've undertaken procedures so the system has been appropriately implemented. Now, we will be majoring on the processes that you as an organisation have already put in place, reviewing those to make sure that those give both of us the appropriate assurances. So we were looking at things like reconciliations between data sources from the old system to the new system, have the payment runs made by the council during the year been made appropriately, so people have ended up being paid the right amounts as it comes through the new elements of the system. Aspects like that, and we will then look at the mapping and the coding of the system to ensure that the output appropriately comes out and is reflected upon your financial statements. Over the page, on page 106, so this is another one of our new aspects, and this relates to the compensation scheme for lost sales fees and charges. So this is one of the government grants that Alan referred to in his previous paper that's contributed to the overall financial position of the council. What we're recognising here is that, again, you have an opportunity and a potential incentive to manipulate this area, so you could include in your returns to central government aspects that weren't supposed to be included within the scheme, or that could just be by error, of course. But as an expected material number within the accounts, we think we need to take a close look at that to make sure that didn't occur. The next two pages, on page 107 and page 108, so similar to the previous item on valuations, we will be looking at values of land and buildings valued under depreciated replacement cost methodologies. Again, it involves assumptions and specialists, so it's just a bit of a same sort of theme, and again with council dwellings. And then over the page, on page 108, is the valuation of pension liability. So again, very much involving experts and assumptions we'll be having a look at, and making sure that the significant change in the value is appropriately supported, but very similar to previous years. And then finally, for the financial statements on page 109, these are the last two of the new areas. So first of all, the new central government grants and other funding schemes. So this recognises the fact that the majority of councils this year, and New Forest being no exception, have had a significant value of new funds coming through. Some of those are for you, so they need to be put in your accounts and appropriately accounted for. Others, you're acting as an agent and passing those funds through to other bodies, and so aspects of those don't come within your accounts. So we need to be sure that you have appropriately assessed each of those types of grants, whether you're acting as the principal or the agent, which directs the form of accounting, and then of course I've got the accounting right as a consequence. So that's entirely new and as a result of the COVID-19 pandemic. And then the last item is accounting for the furlough scheme. So again, COVID-19 related. You made furlough arrangements for a number of your staff through the year, predominantly associated with the leisure centres, as I recall. And again, we need to make sure that's been appropriately supported and accounted for within your accounts this year. So the last area I was then going to highlight for your attention is around section 3 on our value for money responsibilities. What I need to draw to the members' attention is that we are working under the new Code of Audit Practice this year, reissued by the National Audit Office for the financial year 2020. We still have responsibilities to undertake a review of your arrangements for value for money, and that still starts with a risk assessment process. At the present time, we haven't identified any risks, and so nothing in terms of that to bring to your attention. But the key aspect to highlight to you at this point in time is really around the reporting aspects. So in previous years, we've essentially made a binary report in our audit opinion which says, does the council have arrangements, yes or no? So that aspect does remain, but additionally, the new code requires us to put out a commentary on your value for money arrangements. And that commentary is really aimed at the members of the public. So if they're interested, they can see what those arrangements are and our view on them. So it really shouldn't be, the content of the commentary shouldn't really be a surprise for the officers of the council or the members, because your responsibilities, well, under your various responsibilities, you should have a good idea of what those arrangements are, especially the officers who input those arrangements and work with them through the year. If there's an opportunity for improvement, we will take that, and we will put recommendations within our commentary for the council to work with. But as I said, otherwise, the value is expected to be for members of the public to be able to access a summary of what those are and what our views upon them are, and not just hidden away within our audit report on the financial statements. So those were all the areas that I wanted to draw out to the committee's attention this morning. I would be happy to take questions on any of those or any of the other content of the report that I haven't covered. Thank you.
Quite comprehensive. Who decides what's going to be audited and what's not going to? Is that just agreed between us and you, or is it you come and say, no, we want to look at this, we want to look at that? Or is it decided higher up?
It is very much me. It is our audit plan, and we have to make sure that we look at aspects within the accounts sufficient to give an audit opinion on them. And so therefore, to be honest, it's not really a debate. This is what I have to do to fulfil my responsibilities and I'm presenting to you the areas that I have highlighted as those where I need the additional level of focus. So we don't talk about things like payroll, for example, or debtors or creditors. We do them as a matter of course. That would be just the sort of the normal level of risk. We're highlighting to you here where we're putting the additional and extra focus on, so you're aware of that aspect.
Yeah, I think it's probably one for Alan rather than. I didn't. This question of group accounting. I mean, what is new here? I'm sorry. Perhaps I should have picked this up. But is this because of the, the investments we're making in the housing company? Is this what
yeah, that's it. So as you know, we established our group of housing companies in 2019. Right. In our first year of trading, so it would have been 1920, we only acquired a couple of properties. So it fell below the materiality level for our accounts. So we decided not at that point to consolidate. However, we're now up to a total of 9 properties. So because of the capital value of the properties themselves, they now breach that materiality, or they're close to our materiality level. So we now have to bring them into our statement of accounts for external audit purposes.
And we have to do it. Legally, that has to be.
As it's now within that materiality, yes. I mean, what I will say is the Apple Tree accounts standalone are produced by a third party and already externally audited by a third party. So they're sort of standalone, but it's the bringing together that we now have to do that now has to form part of the external audit plan with EY.
And the fact the leisure centres have moved, that won't affect this.
That certainly won't affect this. I mean, it's something that I've spoken to Anthony about for the audit plan for this year. To sort of have a view on those arrangements, that we're making sure that we're monitoring the contract properly and effectively and that sort of thing. But because the leisure centres were largely trading still in-house last financial year, there's no implication there whatsoever. I wouldn't expect so. But however, as Kevin says, it's up to Kevin to come up with his scope, if you like, for his external audit purposes. I can't imagine it would, but as you say, he'll form that view.
Councillor.
Thank you, Chair. I'd say, Kevin, the report about value for money is so important to us as councillors who are knocking on doors and talking to people. So thank you very much for that explanation. Just a pedantic question, and maybe anal as well, but anyway. Just go back to page 97. Your first thing is misstatement due to fraud and error. And in the detail section, it says, as identified in ISA 240, management is in a unique position to perpetrate fraud because of its ability to manipulate accounting records. Presumably that's a standard for all the audits you're doing of district councils. Can I just be reassured on that boring fact?
Yeah, yes, it is. It's a standard that applies to any audit. So not just councils, companies, whatever we're auditing. It is a presumption we see, and therefore we respond to on every single audit.
Thank you. Give me the right answer.
Well, thank you for that plan. I'm just a bit disappointed that, being a customer for a reasonable length of time, that you can't find the resources so that we can actually have our accounts completed within the correct time scale.
We're disappointed too, but that is the factual position. With the deadlines moving last year out to November, so we lost 2 months last year, so we've had to compress the work into two months less, and that's before there were associated knock-ons of councils that didn't deliver. So we are still looking at 1920 accounts. It's lengthened the audit time in terms of undertaking the audit by having to do everything remotely. We lose efficiencies of being able to talk to officers on the site. And then as the world has started to open up a little, we have lost members of our team, and we haven't been able to replace those immediately because of the various pressures upon the auditing and accounting market, which have been widespread and publicised by various reviews, both in the public and private sector. So we are in a factual position where we just do not have the staff to be able to do it by the deadline, and so we've had to take decisions. We will be working on, a strategy to replace those staff, to do training, to be bringing things forward, so we can get back on track for future years. But from our perspective, it is more important to do a proper quality audit to the right standards than trying to hit a essentially arbitrary timescale. So we've had to make that decision. So I recognise it's not going to be entirely popular. We're going to have to work with the officers in particular to manage that in terms of their workload, because we know that will be moving into the budget season and things like that. But we do think it's the better choice of starting the audit and then not completing it and not being able to tell you when it's going to be completed.
So,
Thank you, Mr. Chairman. Actually, the question is then to our Chief Finance Officer. May I ask for his view on that, and can we cope with the changes? Thank you.
Yeah, as you say, it's not an ideal scenario, because what we'd like to do in an ideal world is finish the accounts and then have that followed up with an audit almost straight away, because obviously you're still in that mindset. What Lisa's now going to need to do is put her year-end hat back on in November, which, you know, a lot can happen between now and November. So I'm sure it is going to have an implication to the team, but knowing Lisa and the team as I do, I'm confident they'll be able to still get back into that mindset. What I'm not quite sure of yet is whether there are any other implications. So, for example, typically we'd always have to submit an audited business rates return. And, you know, we've already been reminded that that's due as at the 30th of September. Obviously, I'm now in a position where I'm not going to be able to submit that audited business rates return. I'm not quite sure what that means yet. So I'm still kind of in a process of working some of these things through.
do you think I can ask you, Alan, to prepare a letter in response to the revised audit timeline that has just been shared with us, and outlining our disappointment at the external auditor missing the revised targeted audit compliance date?
Yeah, I'd be more than happy to do that, and I think that to be drafted from yourself as audit committee chair. Yeah, but I'm more than happy to pull something together.
No other questions for Kevin? No. Thank you very much, Kevin. We're nearly at the end. Audit work plan. I think you've got a couple of updates on that, Alan.
Yeah, thank you, Chairman. So just to confirm, as obviously a bit of a knock-on to the previous item with those revised audit timelines, what we did at the last meeting was introduce the September meeting. However, that is now redundant in effect, so the September meeting will now be removed. The plan is to keep with October as usual, because October we tend to be quite a nice midpoint for a mid-year update in terms of internal audit progress, treasury management, and a few other items that we can bring forward. Then the revised proposed date then is the 17th of December. So as Kevin's outlined, EY will be attending in November. So that's then the best fit date, if you like, for us to then have our audit results report, the final set of accounts, the final annual governance statements come forward. So yeah, I'm hopeful that the 17th of December is a good fit for our members.
Okay. Well, yes, Martin.
Thank you. Sorry, just being incredibly presenting. Is the 17th of December meeting going to be at 9:30 in the morning, not in the afternoon?
Yes, it'll be 9:30, and it's a Friday, as is standard for this committee. Yes.
Right, okay, thank you.
Yeah. Okay, so we'll agree with those dates. Thank you. Thank you, Alan. I have no urgent items.